Eurozone inflation edges up as price growth in services remains high. Welcome to Market Insight. I'm Ramzan Karamali. Consumer price inflation in the 20 countries sharing the euro stood at 2.3% in November. That was higher than the 2% reading a month earlier, but in line with expectations. So does today's reading do little to alter the overall picture that inflation is slowly heading back to the ECB's 2% target? And perhaps more importantly, whether a 25 basis point move on December 12th is enough, or whether the ECB should opt for a bigger 50 basis point move. Well, to help answer that and more, I'm joined by Andrew Kenningham, Chief Europe Economist at Capital Economics. Andrew, thanks so much for joining us. So even though inflation did edge higher, are you still confident that it's heading back towards the ECB's 2% target?
Yeah, I think there are very good reasons to be confident that it will come down next year. I mean, the number for November was always expected to rise, and that's really because of what happened in November last year. So there's some so-called base effects in the energy prices, which pushed the headline rate up a bit, but only from 2 to 2.3. The more interesting number was the services number. So that's part of what they call the core inflation rate, and that just came down a touch from 4 to 3.9. Bit disappointing, but the big picture is that a lot of this inflation that's still in the system is basically backward looking. It's a lagged effect of things that have happened in the past with energy prices and with wage hikes. And with the economy slowing and very weak in most countries, it seems likely that that will fade next year. In fact, we think inflation will come below the target, and the ECB will be worried about inflation being too low.
So then on December the 12th, is a bumper rate cut now off the table? The markets see a less than 10% chance of a 50 basis point cut. What about yourself?
Yeah, we are forecasting a 50 basis point cut, but we have had to accept that the recent comments by policymakers in particular mean that that is looking unlikely. We're probably going to have to remove that from our official forecast. I think the case for a 50 basis point cut is very strong personally. Interest rates are 3.25%. Most people would say a neutral rate is just 2 to 2.5. So they may as well get there quite quickly. But it seems that a number of the key decision makers want to continue to proceed quite gradually.
And do you think maybe some policymakers at the ECB could remain fairly conservative, though, until they get the full impact of a Trump administration?
I mean, to be honest, I don't think they will expect that effect to be very large. The US dollar might appreciate a bit against the euro. It already has moved a bit, but the impact of that on inflation is not going to be very large. I don't think anybody would expect widespread tariffs that would push up prices in Europe significantly. If anything, the risks are that the global economy slows more because of increased uncertainty around the tariff protectionism, which would argue for faster rather than slower rate cuts.
So overall in 2025, what do you expect the ECB's easing path to look like?
So our forecasts are for them to cut the deposit rate, which is a key policy rate, down from 3.25% now, so it'll be 3 probably at the end of this year, to 1.5 by the middle of next year. So that will involve an acceleration, so there'll be a 50 basis point cut at some point next year, quite possibly in January.
Well, let's turn to France quickly. How worrying is the potential unstable political situation in France and the struggle to approve its budget likely to be for the whole of the Eurozone?
Yes, I mean, what's happening there is entirely predictable. They have a minority government that relies on the national rally, the sort of far right and far left to get any budget through. It's not surprising they're having to row back on a lot of their fiscal measures, and there's a threat that they may lose a vote of confidence and we may have to have another set of elections in the middle of next year. Seems it's going to be very difficult for any French government to bring the deficit down. And in that environment, we're going to see pressure on French government bond yields. I think they may well rise further next year, and I'd be more scared about where French public finances are going. It's another negative for the Eurozone. I mean, France is just about a fifth of the Eurozone economy, so it's a big player, but it's still only a fifth of the economy. But it's a negative, another negative.
Andrew Kenningham from Capital Economics. Many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.